Okay, what's going on, everyone? We are continuing here. We are looking at the second problem set for chapter 4. We're going to be looking at the next three problems on here, and we're going to be focusing on the statement of cash flows for the first two and then some ratio analysis for the second two. All right, so they're giving us some information here. Cash received, right? Cash paid for an entity. They say, can you please prepare a statement of cash flows for 2027? Please use the direct method for the operating section on there. That's great. We know that. And essentially, if we think about it, right, one of the things we know at a very high level is our statement of cash flows is going to be our beginning cash plus or minus our operating, investing, or financing gives us our ending cash. Here we're using the direct method, which makes it easier. What we can do, right, to help us is essentially, I don't know, we can just look at these and kind of categorize it, right? So we'll make anything related to operating activities blue, we'll make anything related to investing activities yellow, and we'll make anything related to financing activities green. Okay, so let's start with our operating activities. If we look over here, yes, that would include collections from customers. That would that would include interest that we received on notes receivable. Going down here, oh, hey, we bought inventory. Hey, we use that when we run our business on a day-to-day basis. There was some interest that we paid on notes payable. And then we would also have our salaries to our employees, right? So we can do that over here, right? We can do our operating section. We know our inflows and outflows. We're using the direct method, so we would just do that. We would have, let's see, our cash received from customers. We would have our cash received for interest. We would have our cash paid for merchandise, our cash paid for interest, and our cash paid for salaries, right? So we can list these out. Let's see here, 300 or 380. We'll have 6,000. The outflows we'll put as negative 160 on there, negative 5, negative 90. So we have all our inflows, all our outflows. We can just sum all of those items. Hey, we're looking at 131 there, overall a positive amount for our operating cash flows. Nothing too bad. Now let's look and see, can we find anything related to our investing cash flows, right? We said this tends to be related to longer term investments and PP&E, right? So on here, right, collection of notes receivable, sale of investments, right? That's going to be good. Going down, oh, we bought some equipment. All of those are kind of fit into that category of investments that we make or PP&E that we buy and intangibles that we buy. Okay, so we can now do our investing section. We'll make this yellow. And here we will have collection of notes receivable, sale of investments, purchase of equipment. So it'll be 50, 30, negative 85. Sum all of those items. Right, we're looking at negative $5,000 overall, a cash outflow on there. One more to go, right? Just our kind of financing activities. We said we'd make these green. Well, it'll be the leftovers, right? Issuance of notes payable, payment of notes payable, dividends to shareholders on there. All of those kind of fit that financing activity. So if we have that over here at our financing section, again, we'll make it green. This will be issuance of notes payable, payment of note payable, right? Like kind of issuing it, and then the principal repayment, dividends paid to shareholders, right, on our own stock. So this will be 100,000, 25,000, 20,000, and then we can sum it. Oh, not substitute, sum. Okay, we're at 55. Now, right, we have our beginning cash. The balance they tell us over here was 17,000. We have kind of the overall net change in cash, right? So we can then figure out our ending cash, right? So what we'll do here is it's going to equal our beginning plus or minus, right, the inflows or outflows from those operating and investing activities will give us our ending cash of 198, right? So that's what we're doing here. Beginning plus or minus, right? Pretty much the change in cash for the period gives us our ending. Okay? All right, next up, we have exercise 417. We're going to be looking at the operating activities section here. One of the things that we can kind of infer, because they're looking at changes in account balances, we're going to be using the indirect method. Okay, so we have the corporation here. They prepare their statement of cash flows using the indirect method to report operating activities. Net income for the year was 624, so we can start with that over here, right? Net income, get that out of the road. Looks like depreciation and amortization of 87 was included with operating expenses, so that's going to be one of those non-cash adjustments, right? So we're going to add back depreciation or amortization here of $87,000. That's great. We can put a little check mark here. And then what they then give us is the changes in the current assets and liabilities other than cash on there. So we're going to look at these and follow, right? We have a kind of a little cheat sheet here I'm going to copy over to help us, right? So what we've done, right, is we have our net income. We've dealt with the non-cash adjustment, the only one they gave us, we add back. Now we're going to look at these, right? We're going to be looking at our operating assets, our operating liabilities, which will make, I don't know, let's just say yellow and blue. Let's kind of go up here and look at these, right? We have accounts receivable, that's an asset. Inventory, that's an asset. Prepaid expense, that's an asset. Payables are going to be liabilities, okay? That's the first thing we do. We categorize them, and then we say, okay, for the period, right, like accounts receivable for example here, right, for the period, we must have had a decrease, right? Maybe we went from 100 to 80, right? We went down on there. For inventory, we went up, right? For prepaid expenses, we went up. For salaries payable, we went up. For income taxes payable, we went down, right? So it's like down, up, 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 down. It's almost like the Konami code if you know retro video games. But now we have our little cheat sheet to help us, right? We have asset that went down. If we go over here, right, asset that went down, we're going to have to add that on there. We have an asset that went up. We're going to have to subtract that. Again, we had an asset that went up. We're going to have to subtract that. We have an increase in a liability using our cheat sheet over there. We add it. We have a decrease in a liability. We subtract it. So what we can do, right, is essentially use this to help populate the rest of our operating section, right? So we'll have essentially all of the changes, right? So we'll have a decrease in accounts receivable, an increase in inventory, an increase in prepaid expenses, an increase in salary payable, a decrease in taxes payable, right? That's just what's happening over there. And we can use our little items here, right? So we have like plus, minus, minus, plus, minus. We'll just do the numbers, right? So if it's plus, it'll be positive. If it's minus, it'll be negative, right? So we'll add the $22,000. We'll subtract the 9,200. Sorry, to fix that there. We'll subtract the 8,500. Geez, I'm getting this all mixed up here. Oh my gosh. I've been recording too many videos in one day here. 8. Oh, maybe it's my keyboard there. Okay, we're good. We'll add the 10,000. We'll subtract the 14,000. And then essentially, right, what we can do here is if we sum all of those items, we're going to get at a 711,300 for our net cash flows from operating activities, right? That is what we're doing here at a very high level, right? We're going from our net income. We're making our adjustments positive and negative in light of our rules, and that will get us our operating cash flows for that, right? So we're doing the statement of cash flows. There's the operating, investing, and financing. Last time we did the direct method where you just listed out plus or minus. Now we just did the indirect method. Both of them will get you to the same end result. Okay? Let's do one more problem here. They're giving us some information. There's a condensed information here, right? We have kind of 2026, 2027. Can you please for 2027, right? So our focus will generally be over here. Compute profit margin on sales, return on assets, return on equity, and then can we figure out the amount of dividends that we have to pay? Okay, so we will do these one at a time. Let's think about the equations, right? Profit margin is going to be essentially our net income over our net sales. Our return on assets are going to be our net income over average total assets. So average there, we're going to have to do a little bit of math, beginning plus ending divided by 2. And then generically, our return on equity, right, that's going to be our net income divided by, in this case, our average stockholders' equity. So that would be like both our common stock and retained earnings in there. Okay, so we can do this, nothing too bad on here. The first thing I'm definitely seeing a lot of is net income, right? Because we're going to have that here, here, and here. So looking over, oh, okay, net income, not too bad. We're focusing on 2027. We can pluck that right out from there, the 180,000. So we can do that right here, 180, 180, 180. Nothing too bad. Our net sales, can we grab that? Well, first off, let me just do that, right? Net sales, oh, right there. That's pretty straightforward, 5,200. All right, we have our two inputs. We can kind of check off here the profit margin. We're looking at roughly, 3.5%. Okay, so if I were to change that to a percentage and then kind of round it up, there we go, 3.5%. How about our return on assets, right? Well, in this case, right, we need to look at our average assets, which would be essentially right here, there's our total assets, but we'll need to use beginning plus ending divided by 2, right? So we'll need to do a little bit of math here, right? We'll do beginning 1,700 plus ending 1,900 divided by 2. We're looking at 1,800. Accordingly, right, we take our net income divided by our average total assets. We're looking at 0.1, or if we convert it to a percentage, 10%. Okay. Finally here, for return on equity, we can take a look at the average stockholders' equity. So that will be both retained earnings and common stock. So we'll do beginning plus ending divided by 2, right? So we'll do beginning would be 500 there, right? The 400 plus the 100. The ending would be 550, the 400 plus the 150. We'll divide that by 2. We're looking at 525. If we were to do the math, 180 divided by 525, we turned it into a percentage, right? We're looking at, in that way, 0.3%, right? So our profit margin is 3.5%. Our return on assets is 10%. Our return on equity is 34.3%. Whether that's good or bad, part of what I would need to see is what other companies are doing. The next thing they want us to find out are our dividends, right? So we have to kind of think about this. We can use phone a friend to our retained earnings equation. But if you remember, right, it's going to be your beginning retained earnings plus your net income minus your dividends gives you your ending retained earnings, right? So we can kind of pluck out some of this information, right? Beginning retained earnings is 100. Our net income for the period is 180. We need to solve, right, for those dividends that we paid, which will give us our ending retained earnings from over here of 150, right? So it's going to be essentially what we do to solve for this, right? 100 plus 180 minus x gives us 150. You rearrange that, you do the algebra on that. We're going to be looking at dividends paid here of 130. Okay, so just kind of looking at the financial statements there with that. But with this, right, we have finished up all the problems. We will end the video here.